So, welcome, guys. Today we have Jared, who was my personal hard money lender. I can't say enough amazing things about Jared and his company. So, I personally, not planned, had to do a complete gut renovation on one of my rental properties. And I was fortunate enough to be connected with Jared, and he totally helped me walk through the process. And what's amazing is he's here with us today to kind of share what hard money loans are and different ways you can utilize them. So I don't want to take away too much of your thunder, Jared. I will let you take it away.
Sure. Thanks, Dan. I appreciate your time. Thanks for having me. Hi, everybody. Just some quick background. I'll give you guys a sense of hard money. I'll give you a sense of what we do here at Direct Mortgage, and I'll give you some quick background on me. Just briefly, we own and operate a Direct Mortgage Loan Company, which is a private hard money financing source here in Philadelphia and the surrounding area. We also own and operate a company called Pontz Properties, which is a local investment and property management company with about 700 or so units under management, of which we own about half, all multifamily. So we're sort of on both sides of the business, and we like to think that the property management investment side helps educate us and keep us strong on the financing end. So with that, hard money loans, kind of a dirty little word in the real estate investment community, unfairly perhaps, but people don't necessarily understand what we do or how we do it or why we do it. But we offer a service just like realtors do, just like accountants do, just like lawyers do. And we have our model and our way of pricing and our model and our way of putting deals together. But it's no less necessary and needed in the market than many other niche businesses. So, the whole concept of hard money is making the process easier and quicker for the investor. But that comes along with the price, and the price tends to be more than, or is absolutely more than conventional financing, but has a large range of what that is. So there's different types of hard money lenders. There's asset-based hard money lenders, people that don't care about much of anything other than the loan to value of a deal. So, they may not pay attention to credit. They may not pay attention to somebody's background, bankruptcies, foreclosure, mortgage rates, whatever the situation may be. Their focus is, hey, I'll lend you 50% loan to value, because if you mess up on the deal, I'll take back the property. There's that sort of hard money lender. And those people tend to charge, in today's market, anywhere from 12 to 15% interest and 3 to 5 points. That is not us, but that is a huge piece of the hard money world and what kind of gives the business a bad rap. And then there's sort of the lawyer doctor hard money lender, the guy that's made a few $1 million doing what he does for a living and is looking to invest it and doesn't want to put in the stock market because the stock market's going to give him 4 or 5%, and he can go ahead and put together loans for friends and family or people that he can meet through referrals and put a couple $1 million on the street, but he's very limited. And then there's sort of what we do, which is we have, to give you a sense, about $60 million on the street, all around Philadelphia, all around the surrounding counties, Pennsylvania, South Jersey, the Jersey Shore, anywhere from, right now we have about 240, 245 loans on the books. And that can fluctuate, obviously. It can go up, it can go down. But we have the capability of churning out a lot of business in a very quick period of time. And you never sort of have the, we're not Wells Fargo, right? We're not operating with branches all over the place, but we have one central location, but we're not operating out of a phone booth either. We have the capability of doing a lot. And I guess the central question is, why do people come to us as a hard money lender? And it's hard to have this conversation without kind of giving you a sense of us. But I'm going to try to give you guys a sense of hard money using direct mortgage as the example, just because it's what I know and how I know it. And obviously you guys at the end will have an opportunity to ask some questions that may help broaden the scope of the discussion as well. But people are borrowing from us. We're really fast. We close, banks could take, as you know, anywhere from 60 to 90 days, sometimes more, to close deals. They take a while to underwrite them. They take a while to get the approval. Sometimes they take a while to communicate and interact with. And we're, sort of same day response time. Jared or one of the members of our team, I have a deal. These are the numbers. Is it something you have interest in? Typically same day, we're able to take a quick look at it and respond back to you if we have interest. And we can underwrite it, put together a term sheet all within a couple of days. And usually we're closing loans within a couple of weeks, sometimes less, sometimes more. It really depends on what the investor needs. But oftentimes, somebody comes to us who we have a relationship with, where a loan, they may have a bank loan that falls through at the last minute, or they might get a cash deal that they need to close in 10 days. And we're able, as long as title is available, we're able to close those. Our biggest, we like to think we have lots of advantages, but our biggest advantage is that we can really, especially where we have a relationship and where title is ready, we can pretty much do whatever we need to do. We have total control of our money. We don't have any masters in that way. And we can, I think, thinking back last week, I think we got a call on a Friday for somebody who needed to close the following Thursday. It was a land deal, fell through with a bank, a local reputable bank, but there was an appraisal issue, and they couldn't. They didn't think they could delay it. They ended up breaking the deal up and delaying one of the assets a couple of weeks, and the other one they had to close within that 5-day window. And basically over the weekend, we just went back and forth gathering lots of stuff. And by Monday, I think they had the approval. By Tuesday, had the paperwork. Title company was in the mix, and we closed on Thursday. I think that was Tom. You're on the call. Tom works with me. I think that was a $500,000, $400,000, something like that. It was a sizable loan. I don't remember all the details, but the point is we move quick. And folks are borrowing from us for that speed. They're borrowing for us for making the process easy. We like to think all along the way, sort of every step that you go through with the bank, we can make easier. We have a one-time application process. People are, you apply once, we gather all the information. We sort of do a face-to-face. Now this is considered face-to-face, sometimes in person on the sites, sort of meet and greet. You get to meet us, we get to meet you. And then we never do that again. We base everything on the relationship going forward. So you pay on time, you keep a good job site, you communicate well, you come back to us for another loan. We base it all on that. We keep really good, we use good servicing technology. We use Salesforce pipeline management, so we can keep pretty much every detail, but every conversation on record and always reference back to it, which allows us to really focus in on the relationship and kind of not focus in on, did your credit go up or down 10 points, or did you, is your cash in the bank this or that? Really lets us focus in past, that first deal. Obviously, we need to know who we're dealing with, but beyond that, we love to just run, and that's what allows us to move so quickly. We also don't require appraisals on deals under $500,000, which allows us to move really quick. We're sort of a unicorn in the industry in that way. In the beginning, you heard that I also own and operate a company called Pontz Properties. So my business partner is Bob Elfant of Wissahickon, which I'm sure you guys, being KW Philadelphia, have worked with them. And so we have unlimited resources in terms of the ability to get local data and information. We're all licensed ourselves here at Direct Mortgage, so we have access to the MLS. We have access to appraisers that will give us quick information. We have a database of about 2,500 investors that we worked with over the years that we have very good relationships with, that we can reach out to. And because of that, we're not scared of deals that a typical bank may be scared of, or that might require a third-party appraisal. We're willing to kind of jump into it, do drive-bys, get in out of the property, do some down and dirty analysis, and that allows us to close really quickly. And that makes the process easier. But all along the way, whether it's running a deal by us, putting the deal together, looking at some sort of creative structure, using additional collateral to borrow more money than you otherwise would be able to borrow, the communication, the interaction, our back office, every step of the way, we like to make that communication quicker. And that's the whole goal, right? You're paying us a premium to borrow the money, and the concept of hard money, and certainly our business model, is all about making it as painless and as simple and easy as possible for the investor and or the realtor working with the investor, and or the title company and or the lawyer. Really, every step of the way, we want to make it painless. And we think we do that, and our kind of our reputation out in the business world seconds that. We try to get rid of the restrictions. We don't look at ratios like a bank looks at ratios. We're quickly looking and underwriting the deals, not worrying about you give us a budget, and we're looking to make sure that your $85,000 budget shouldn't be $50,000, but we're not worrying about whether it should be 80 or 90. That's on you. We're just making sure that it's not too out of line. The relationship driven nature of it, the speed, the ease of the process. We fix our rates, which is pretty unheard of in the financing community. All our loans are short-term bridge loans, so they're typically 9 to 12 months with some extensions. We also do we have less expensive 4-month and less expensive 6-month options. But because we're doing short-term bridge loans, we're willing to fix that rate. We may lose a little money on a deal here or there if rates go up, especially in the current environment. But the way we look at it, it's a real strong advantage for us. It gives the investor the certainty in kind of an uncertain business, right? You're going into these projects and you don't necessarily know every last item. Things might jump up. You might have to replace the sewer line to the street or a roof that you weren't expecting, or some sort of structural issue. But you can count on the rate being locked with us. We focus strictly on the bridge side of the business. So there's a lot of lenders out there that are looking at doing permanent lending, getting sidetracked with lots of different kind of schemes and opportunities. We like to focus in on being the best bridge lender that we can be, being there for some examples of the loans, right? So we do bridge loans for acquisition, we do rehab loans, new construction loans. We do loans on warehouses, so all sorts of industrial, gas stations, restaurants, bars, multifamily, single family. Really, the only thing we don't do is owner-occupied residential. So if you or one of your clients is moving into a property, we can't help. But other than that, we pretty much do every scenario that you guys could dream up. We've either looked at it, we've done it, or we would do it. And then in terms of sort of loan structure, to give you guys a quick sense of how that looks, typical loan, like I said a minute ago, 9 to 12 months interest only. We also have a short-term 4-month loan and a short-term 6-month loan. Those are less expensive options. The idea there, we do a lot of loans where somebody comes to us, they just need to buy land, or they just need to buy the property, and then they're going to take us out with it by flipping it quickly or by getting a bank loan or something like that. And so we can turn our money quicker, so we're willing to lend it out for cheaper. So as an example, a 4-month loan, we're at 8.5% and a 2% fee. 6-month, we're at 9% and a 2.5% fee. And anywhere in the 9 to 12 a month range, our interest rate can be as low as 10% and as high as 11 with a 3% placement fee. We also pay out a 0.5% referral fee to anyone who refers us business. So as example, if any of you guys have clients that are investors and you do an introduction to us, you say, hey, Jared, here's John. John's an investor. Good luck. We do all the dirty work. We put it all together. We pay a 0.5% referral fee on that. And we build those out as annuities. So you get a fee on the first few. And if you build a regular relationship where you're doing it, we can do it all the way up to 10. And so quick intro and you're getting paid for a while. And then in terms of those are basic rate fees. Like I said earlier, we don't charge any no appraisal fee on loans under $500,000. Loans over $500,000, we do require a third-party appraisal, but we can do those fairly quickly, typically 2 weeks on single family. And larger multifamily or land deals with the current environment could be 3 weeks, sometimes 4 even, depending on the size of the deal. We charge no processing fee. There's no legal fee. There's no document prep fee. There's no prepayment penalty. Like I said a minute ago, our rate's locked. There's no junk. We keep it really simple. The way we look at it, we charge a 3% placement fee. There's probably cheaper so you could probably find somebody out there lending to you at 2 or 2.5%, but they're charging you most likely a lot of other extras in there, and they all add up to the same. Our theory is make the fee process simple. Don't charge the extra junk. So it's very transparent, no surprises, anything along those lines. We also only charge interest on the money outstanding. That's a very important thing if you're shopping hard money. A lot of hard money lenders charge interest on the entire loan amount, regardless if it's funded or not funded. And that usually gets people by surprise. And then in terms of draws, we're extremely quick on draws. We do it all in-house. We don't rely on third-party inspectors. Most banks, as you guys know, they get a draw request. They then send it out to the third-party inspector, who then needs to schedule it. From the time you send it to the bank, it's a day or two before they send it out. Once the inspector gets it, it's a day or two before he schedules it. Once he gets out, it's a day or two before he gets it back to the bank. Once it gets back to the bank, it's a day or two before it's funded. By the time that's said and done, it's 7 to 10 days before you get your money on the draw request. With us, it's all through our website. We get it through our app on our phones, instantaneous. We have three people out doing it. Well, 2 people always out doing inspections, 4 total people that do inspections, and they get it instantaneously. And within 1 to 3 days, you have your money. Sometimes same day.
I can personally attest to that. It was really, really remarkable, especially hearing what so many other people went through. And they're like, oh, you got to be careful. It's going to take forever to get your draws. I'm jaded now because I'm like, I had the best experience ever. There were times literally on a Friday I would submit, and by sometimes the guy would come out Friday to come and inspect, which was like unheard of. And, easily, depending on my bank, honestly, it would be either Saturday or Monday. So I can personally attest to how quickly and amazing Jared and his team are when it comes to draws, which anyone that is working with investors, that is huge. That can make or break you getting your construction guys to show up the next day.
Absolutely. It's the biggest pain point that we hear when we talk to potential leads. When people call us and just are talking to us, and maybe they're using another lender, whether it's national or local. And one of the things almost bar none that comes up as a pain point is the inspection process. And so we've really streamlined it. It's all automated. It goes right through our system. Like I said, it goes instantly to our app. It gives us a notification. It goes into our email. It gets assigned within moments, literally within moments. It gets assigned internally. And then, again, Tom, who's on the call with us, is one of our loan originators and inspectors. And sometimes he could be out in West Philly, get a ping that he's got a request out in West Philly or in Center City or in the Northeast, and just look at his schedule and say, I can just knock that out now. And he just goes and knocks out the draw right then and there. And sometimes people are just like, what? I just put in the draw request an hour and a half ago. You're telling me you're ready to fund me? That's fairly rare. That's quick of a turnaround, but it's not out of the question. So draws, we spend a lot of energy making sure that we do that quickly and well. I think in general, one of our one of the pitches that we always make to people is, in general, we really, really work hard on our customer service, our communication, and our speed. That's all well and good. I could say that 10,000 times, and you guys will take it for what it is because it's coming from the owner of the company that's talking. But I always say to people, you can compare us to, or you compare hard money lenders just like you compare regular lenders. But you, just like a lawyer, just like an accountant, you never quite know until you try someone. Someone can sell you on something. You can get a good referral from someone. But if when you use somebody, there's so many other advantages, particularly with us, that you sort of feel out while you're doing that first deal that you don't even know comes up. The speed of getting the payoff, the draw, your budget, something funky happens to your budget, you need to move money around, and you can just do that quickly with somebody. You get somebody on the phone quickly that can give you a quick answer versus having to wait a few hours for a response or a day for a response. There's all sorts of little things. And we're not the only ones. Hard money in general tries to work in that manner. I just happen to think we're the best at it. But hard money in general is focused on those sorts of things. And then I think sort of the other thing that is critical about sort of hard money is the focus on relationships. So everybody says their relationship, right? You guys sell yourselves on relationships in your business, right? You go and you do a listing pitch and you talk about the relationship and your connections and how many houses you sold and where you sold them and that sort of stuff. And we like to do the same thing. We can map out for people, we've done this many loans in this neighborhood, this many loans in that neighborhood, this many loans in this year, in this month, this size, rehab, not rehab, types of loans. We can do all of that data and explain to someone and show to somebody. But the most critical piece isn't that we can do, we're not interested in a happy hour. We're not interested in going out for a drink or a bar or lunch. That's all well and good. That helps create relationship at some level. But my team and I'd like to save our time to be able to move quickly. So if Dana calls us on a Thursday, we can respond to her on a Thursday. She's not waiting 2 hours to hear from me because I'm not having a drink with somebody for lunch at park. I'm sitting at my computer or I'm got my phone by my hip so that I can respond quickly to somebody. And that's really the mantra that we operate by. No wasted time, efficiency, and that's all about being able to quickly service and respond to people. And so I can keep on going on and on and on. And I'm happy to. There's a lot more about us and about hard money that I can pass along. But why don't I take a little break, give myself a breath, and give you guys an opportunity if anyone's got some questions. That often leads to bigger and better conversation as well.
Yeah, so we'll open it up, guys. You can either drop a question in the chat or you can, turn your microphone on and your camera on. We'd love to answer any questions. I know a lot of you maybe first-time investors or are working with investors. This is a great opportunity for you to pick Jared's brain.
And it doesn't have to be about direct mortgage, guys. It could be about anything.
I'll pop in there.
Sure.
Hey, so my question is, from what I understand, just to kind of clear it up, it might be an obvious question. I just popped in a little bit later. So am I to understand that's kind of like a cash deal, essentially? You're lending them the money up front, or does it work a little bit like a mortgage in any way? And I guess for Dana, on the agreement of sale, is that kind of what it looks like, a cash deal?
So why don't I think I can answer all of it, Dana.
Yeah.
And then you can
Awesome.
jump in from the agent side. So you can certainly do it as a cash deal, but no, it's a mortgage. And there's a mortgage gets recorded, and there's a stack of papers that the borrower signs. And I have a 3 full-time admin people, a full accounting team, 3 originators, a manager. I mean, a full set of people doing lots of different things. And the mortgages get recorded with the county and whatever county it's in. And it's on record. There's liens, there's title, it's all that. We deal with people who are using us for acquisition. We use, so where we're coming to the table and we're laying a percentage of the acquisition price. We work with people where we're doing just a rehab loan where they pay cash and we come in just for the rehab. We deal with people who pay cash and then we come in and we do a refinance and cash them out on what they paid. You sort of can mix and match all those sorts of scenarios, different sizes. And we do that. A lot of people do pay cash and then come back to us after the fact. But I think what your question was how do you put it on the agreement of sale? And you can do it any which way you want. It depends on sort of the seller, what they're willing to accept, and it depends on how badly you want the property as a buyer. We work with a lot of investors who go in as cash. Like the pros, the guys that all they're doing is buying properties, they go in as cash buyers with a very small deposit typically, and then they get it all locked up, and then they come to us with their agreement already locked up in the whole deal, and they say, hey, I have this property, these are the numbers, I'm cash, I need to close in 3 weeks. And then we put it together, they show up with us as though we're cash. You can't do that with a Fannie, Freddie, HUD type property or a bank-owned foreclosure. Those sorts of properties that investors are getting, they have to be transparent. So oftentimes they go in cash, they line us up, and then they go back to the bank and they say, I can be cash, but I have a hard money lender. And I'm just making you aware. That way a deal doesn't fall through. Or they go in and say, hey, I'm hard money, but I can close cash. Here's my BFI if I need to close cash. So there's all sorts of different tactics to do it. But certainly you can go in cash and still use us if you want to. And Dana, you can add to that, I'm sure.
Awesome. Yeah.
Yeah, so I'm gonna share my screen with you guys so you can see. So most of you may have known or been through the pre-approval process. Once you have that conversation with Jared initially, and you talk about what you're looking to do, you're going to get a document similar to this. So this is my personal document, which is why I'm not afraid to share it with you guys. So I had a conversation with Jared back in December of 2020. This is kind of what we want to do. Similar to a pre-approval letter, we get a letter from him and his company explaining exactly what they are offering us, the exact property, because we owned this investment property and we were gutting it. So we took the money for the construction part of it. They clearly break out for you, it's a refinance and rehab, the total loan amount, the funding at closing, the draws. So it is very, very black and white. You know exactly what you're getting into. It outlines the interest. It outlines the origination fee. It outlines your escrow. You can see we had 0 deposits we needed to pay, and the terms, which was 9 months interest only. What I loved as a first-time investor for me personally was we had structured the loan because I originally had a small mortgage on this property, and I was really concerned about also having construction costs on top of that. Jared was able to structure this so we took the whole package, and we had in that escrow amount that kind of paid my draws. So I didn't have to make a monthly payment over those 9 months. That's a huge benefit when someone is going through construction, to not necessarily have to carry a mortgage plus construction costs.
Yeah.
So huge add, for those investors for these projects. We all know things come up, things happen. So yes, sometimes it's scary when you see numbers like 11% interest, but the benefits that you get, like I didn't have to make mortgage payments for 9 months. That might not seem like a big deal, but that small little headache so that I could just focus on getting my project to move forward was totally worth it. And I wasn't, again, that was only on interest. People get really caught up in numbers. It's not like a traditional mortgage loan. So you will very much know black and white. You'll get a letter like that from Jared if you're going through that loan process. Like Jared said, it is a mortgage. There is paperwork. The nice part about it, though, is that they really take care of a lot of that for you. I would also highly recommend, don't try and fake it. If a client has a question, that's what Jared and his team are for. Do a Zoom call, set up a phone call, let Jared talk directly to your client to explain the ins and outs of what their situation may be and what may be the best way to structure things. Anything to add, Jared?
Yeah, 100%. Let us do the legwork. Nobody can explain the business and how we do it better than we can. And there are a lot of nuances to all of these sorts of discussions and situations that we can help walk somebody through, talk somebody through. It's kind of where we're good. We can get creative and help kind of find solutions to issues or problems that you may see or that your client may see. Just to also touch on what Dana said, borrowing hard money is an opportunity cost analysis for everybody. So you look at rates, fees, costs, and you say, wow, oh my gosh, that's so much money. Well, if you actually think about, and this is not always the case, but in most or many situations, if you actually do the math and you think of the amount of time you're saving, the speed with which you're working through, possibly the structure that we're able to create, you can save a lot of money. And in many ways, we do this analysis for people oftentimes where they say, man, you're 3% higher than what I can get from my credit union. I don't know. And we'll say, all right, well, your credit union is going to take you 3 months to close. They're going to take you a week to get you every draw. You're going to, by the time you get done with them, you're going to be on the books with them for 10 months. We're going to close in 2 weeks. We're going to get you a day in the draw. When you're done with that, you're going to be off the books in 7 or 8 months. And what's that interest differential? And we'll be able to show them sort of how, yeah, our rate and fee is more when you look at it, black and white, but when you actually think about all the other advantages and put it together and the time savings, how it's not. And then you guys got to make your own business decision. We're not for everybody. We know that. We're cool with that. And we don't mind explaining it to folks. And then, people make their own call. And then in terms of the interest reserve that Dana mentioned, Dana, that was the setup that you had was fairly unique in that you were right in the middle of COVID. I mean, we're still in the middle of COVID, although it depends on who you ask. COVID's over to some people, I guess. But we were heavy in the middle of forcing interest reserves on people. We still allow for interest reserves, but one thing we're doing now is what we always do is we look at the budget. We allow people to build in contingencies and or kind of, if the deal allows it, fluff isn't the right word, but kind of build in some room in their budgets to allow for the what ifs, allow for some mortgage payments to get made out of it, that sort of thing. And so we help set the whole goal is to set the client up for success. We like to say that it only makes sense if everybody wins. If direct mortgage is the only person winning, is the only person making money, it's a failed transaction. Even if we make money, if you guys don't make money, your investors don't make money, it makes zero sense for us, because we're not in business to do one-offs with people. We're in a relationship business. It's all about repeatability. And so we want it to be successful. We want the investor and the client to make money and to make a lot of money. That's the whole goal. And so we, everything we do, and Dana could probably tell you this, and certainly if you know other people, and there's plenty of other people at KW Philadelphia who we've went to and worked with over the years, they can tell you we try to talk people out of deals sometimes. Some people come to us with deals. Actually, one of your agents, whose name I won't mention, just a few weeks ago came to us with a deal, and I talked him out of a deal because I thought it was what the numbers weren't great, and ultimately he backed off the deal. But our thoughts are, yeah, we may talk somebody out of, or we may not think it's a great deal on this particular one, or it may not be the right fit on that particular deal, but we'll get it on the next one. And the good karma that we can build by being honest and upfront and working with people to help them understand and give them kind of the value add that we know from being out and about in the investment world, will get passed on and work to everybody's advantage as a relationship would grow. So.
Did that answer your question, Caleb?
It did. Thank you. Thank you so much.
Yeah. Any other questions?
Hi, I put it in the chat, but I was wondering, what is the financial criteria needed for someone who's a very first-time investor who maybe doesn't have a lot in their own bank, if that's an option for them?
Yeah, awesome question. So I'll try to make this answer shorter than I did with Caleb. I get excited answering these questions, so sometimes I can get long-winded. But we work with all sorts of clients. So we work with the seasoned pro who does nothing but flipping houses. We work with the big-time developer who's just using us for land and borrowing money from the big banks. But we also work with first-time investors. It's actually one of our favorite groups of clients. We're typically looking for people. Our way of looking at it is, if you have a good head on your shoulders, that's good enough for us. So we look at credit, we look at experience, we look at liquidity, we look at income, we look at all those things, but we don't look at it in a box. So it's sort of a puzzle for us. And we have our criteria. Okay, credit should be around this. If it's a little less, okay, but it's not a disqualifier on its own. What are the other factors? Okay, liquidity, we want it to be around this, but if it's a little less, okay, what are the other variables at play? And then we also look at who the referral source is. We look at the location of the property, the type of deal it is. It's a big box. So cash on hand, liquidity. I think Sari, if I said your name properly, is not a deal breaker in and of itself. We're looking at the big picture. Frankly, a lot of real estate investors, whether they're seasoned pros or first timers, don't have a lot of liquidity because they're putting all their money into their deals. And so you have to be open-minded to the fact that maybe they're light on cash, but they're active, or they have another career that they're doing, or they're reinvesting their money constantly, or they just dumped a lot of cash into a vacation home, but they had the liquidity and they just spent it. So it's a big puzzle. But we work with first-time investors all the time. It's a big piece of our business. We like to do that. We like to build those relationships. Some of our biggest clients today are people that we started working with before they had any experience. Sometimes we take co-signers if they need a co-signer. Sometimes we take additional collateral if they own other property free and clear or with a lot of equity in it. We like to figure out ways to make deals work for people, whether they're first-time investors or the most seasoned of pros.
We have another question in the chat from Wes. Do you work with LLCs or individuals only?
All of the above. I'm working on a trust right now, $1 million loan for a client who's putting a deal in a trust. And everybody personally guarantees the loan. There's no loan where there's not a personal guarantee, but in terms of how the property is deeded, we could care less.
So I'll share with you guys, this is really helpful. And again, this is all thanks to Jared and his team. So when I first got started, this is kind of what they helped me break down. So I presented them with like the typical contractor, here you go, proposal. It's going to cost $89,000. Him and his team helped me create this spreadsheet to really understand what a draw schedule is going to look like. And I show this to you to kind of, for those of you who maybe have never heard of a draw schedule or know what a draw is, they're not going to give you one giant lump sum of $89,000. Like, okay, here you go. It's done in a step-by-step process. And this is not only to protect you, but also, them as well. They want to make sure that as the work is being done, you're being given the money. So one of my ahas through this whole process was you do need to have some cash up front because you need to necessarily front to get the job started. They pay after the work has begun. So I didn't know that. Thankfully, I had a little oh shit fund set aside. But Jared and his team helped me break down of that 89, what is going to what aspect. So demo, framing, masonry, new windows, siding, HVAC, you can see everything is kind of broken down. And as we progressed in the project, based on the work that was accomplished, I was able to get what's called a draw. So draw one, we did all the demo work, we did the framing, we installed the rough for plumbing, and we started doors and trim. That broke down to about $16,000. I sent a draw request for $16,000 on Jared's website. The inspector came out, said, yep, that was done. And then I was sent off a portion of that $16,000 as my first draw. And that is how the project progressed until I got all of my $89,000. Once everything was completed, then I refinanced it, paid back Jared the loan, and the rest was mine. So I hope that's helpful. I just wanted to share that with you guys if you've never seen a draw schedule.
And that draw schedule is sort of, it's fairly dynamic. So, it's something we can work with you on. You can ask us questions. A lot of people come to us and say, this is what we, just kind of put it on our lap and we work with it. But it's fairly dynamic, and it can kind of be changed around as the process goes along as well. The total amount can't really change. If you borrow, $80,000 to do a rehab, and you come back and say, hey, I'm $5,000 over, you can't make $5,000 get added to the loan. It doesn't work that way. So you have to be smart about it. But within that 80,000, if you need to move stuff around between electric or plumbing or windows or roof or siding or whatever, we're pretty flexible in that way. And then in general, I didn't really mention about the structure of the loan in general, but I think that may be important here so that you guys have a sense of it. The structure in and of itself is not unique. It's pretty cut and dry. It's all the intangibles around the structure that make what we do valuable to people. The structure, typical structure, is 75% of acquisition price plus 100% of whatever somebody needs to fix up or construct the property. The that's based on the subject collateral only. So whatever property you're buying, right? If you're buying, but within that, we'll end up to 70% of after repair value. So we can back into whatever that budget is. So if your budget, if you only need $60,000, let's stick with $80,000 to rehab a property, but the after repair value is high enough, it could allow us to lend you $90,000, build in a contingency, build in something to help you guys feel comfortable going into the project, which allows you to kind of be creative. Most lenders or banks don't really work with you in that way. That's just kind of one of the advantages of how we look at it. We look at it based on after repair value. And another kind of trick is that we will take additional collateral. So a lot of investors own, vacant land or a rental property or whatever, a small business, whatever it may be, free and clear. They paid for it cash, or they own something with a big spread in equity, and we can take that property as additional collateral and then more up front. So instead of 75% on you pay 100,000, instead of giving you 75,000 at closing, we can give you 80, 90, 100, 120. All depends on whatever that additional collateral value is. So there's ways to kind of skin that cat.
Jared, I know some of us may hear the words like 203K loans, which are also used in banking. How is hard money different? And in my turn, I think better, but can you kind of share how that's a little different, hard money versus a 203K?
Yeah, so I mean, the idea, the concept's the same. It's the pain that one would go through for a 203K. First of all, it's through a conventional lender. We don't do that. So you have to go through that process. The underwriting process is what you would expect with a bank. The closing process, the draw process, there's different requirements. I don't know all the details of the requirements of the draws, but there's all sorts of different requirements that you have to meet, the third-party appraisals, all that sort of stuff. 203K is basically a rehab loan for a first-time homeowner or first-time investor. And I think, correct me if I'm wrong, on a 203K, you're supposed to move into the property. But that with us, it's everything I've described so far. We kind of cut through all the pain that you would go through with a conventional 203K. And frankly, somebody who's looking at considering a 203K wouldn't have any, somebody who's considering us would not be also considering a 203K. They're just so different from each other. It's not really a discussion. It's not like somebody's looking at our term sheet versus their term sheet and being like, oh, which one's better for me? It's not, if you're willing to go through the pain of a 203K, you're going with it because it's bank rates and fees.
Yeah, I think the biggest piece for me was the fact that you have so much more control. Just like big banks, guys, there's a reason why we're not huge advocates for the Wells Fargo PNCs of the world, because we know you need to, God forbid, get anybody on the phone. It's like Russian roulette. You're lucky. You're dialing an 800 number. You're getting transferred to who and who and who. If I had a question at any point, I had Jared's cell phone and I would call Jared, or I would call, someone on his team, and I got an answer right away. So the customer service piece of working with Jared and his team is undeniably worth every single cent. So if you have maybe some of those pain in the butt, clients that really need a lot of handholding and attention, they're going to get a way better experience with Jared and his team than if you're going with like a Wells Fargo or a big bank that's going to do a 203K. Any other questions, guys? We got about 12 minutes left of Jared's time. Is anyone excited to possibly do a hard money loan this year?
I see everybody's face. They all look excited.
I have a feeling that I'll have people who need one, but
In your future though, right?
yeah.
Look, Dana, I'm sure will share our contact information. If anybody has questions that come up after the fact, whether it's today or in 6 months from now, feel free to reach out to us. It doesn't have to be about a deal per se. It could just be about the concept. It could be about hard money in general. whatever. We answer all sorts of questions for all types of different people asking them. We're open to those inquiries, so feel free to reach out if something comes up. And no strings attached. We've got plenty of business. We're plenty busy. So we certainly would love business, and we're like anybody trying to grow our business, but we recognize that every interaction does not necessarily lead to a closing or revenue stream. It's about the bigger picture.
It's also really good, guys, as you're building your book of referral partners. You may have your preferred FHA lenders, your preferred conventional lenders. For those of you that want to get serious about working with investors, it is very important that you have trusted lenders that have experience working with investors. And Jared and his team absolutely do. So he will make you look like a rock star if you're like, hey, an option is hard money. Have you thought about that? Let's have a conversation with Jared. So just as important as your home inspectors and your traditional lenders, having lenders that can be creative with investors is going to make you look like a rock star.
Yeah, oftentimes investors don't even know what hard money is, especially early investors. And when they learn about it, it's like a light bulb goes off. And like, oh my gosh, the things I could do, the speed with which I can grow, the types of deals I can do, the opportunities available to me. Those are sorts of the comments that we hear when that light bulb goes off. Like I said, particularly to investors early on in their careers.
Absolutely. And guys, I put Jared's email and office number in the chat, so you guys have that. Feel free. Jared would love, to have a conversation with you or any of your clients. Jared, thank you so much for your time. I know you're super busy. It's amazing
Absolutely.
to see you. And I'm so grateful for everything you did to help me and my family with our personal transaction.
Got it. Thanks for having me. Everyone, good luck. And we're here if you want to chat.
Thanks so much, Jared.
All right. Bye-bye.